Hi and welcome to Westpac London's end of day report for Wednesday, September the 7th. Positive equity market sentiment today and a reversal of yesterday's weakness, particularly in Europe, and again largely triggered by European developments. Markets chose to view Italian budget austerity measures, particularly related to a VAT hike, as favourable, even though there's still some political toing and froing going on about that. But the other point was that the German Constitutional Court ruled that the claim by plaintiffs that the German participation in the bailout of Greece, and in fact Portugal and Ireland as well, although Greece was in focus today, was illegal. They actually ruled against that. And so, although they've said that there needs to be a bit more parliamentary approval of future bailouts, to this stage at least, we haven't seen the whole bailout process derailed. Now, that gave investors confidence that, along with those budget measures I talked about, that at least for the time being, we can see Europe continue to muddle through. And so that saw equity markets push higher. Also helping along was, in contrast to yesterday where we saw a big fall in German industrial orders in July, we saw a 4% increase in German industrial production in July. So that helped markets along as well. No big US economic data to report today. However, we've had comments from the Chicago Fed President Charles Evans, and I'll quote him. He's saying that he's urging very significant amount of further policy easing, and he said we should not be afraid of any temporary spike in inflation that might result from that. He votes on the FOMC this year, so that's an interesting counterpoint to some of the more hawkish commentary we've seen from some of the dissenters at last month's FOMC meeting. The case is slowly building in the US for further easing, it seems. Now, I'm doing this report at 4:30 London time. In 2.5 hours, we'll get the release of the Fed's beige book, which is their district by district summary of economic anecdotes relating to how the economy is performing. So that's something that also might give markets a little bit of direction later on. In Canada, interest rates were kept on hold, and interesting that the Bank of Canada certainly toned down their assessment, whereas in July they said that some of the considerable monetary policy stimulus currently in place will need to be withdrawn. This time, 6 weeks or so later, they've said that in the light of slowing global economic momentum and heightened financial uncertainty, the need to withdraw monetary policy stimulus has diminished. Okay, so BOC clearly softening their stance. They're effectively taking away some or all of their tightening bias. So that's where we stand at the moment. They're the main points to make. In terms of market performance, we've currently got the Dow up 1.6% and the broader S&P measure of the stock market in the US up almost 2% today. Heading into the close in Europe, we've got the FTSE up 2.8%, the French market up 3.2%, and the German market, the DAX, up 3.7%. So good solid bounces in Europe. And the US market also doing pretty well. The other factor driving US markets higher, I think, as well as those Charles Evans comments and the positive sentiment in Europe, has been increased speculation that President Obama will deliver something helpful in his address to Congress tomorrow. He's talking about a $300 billion package to stimulate the economy next year. That seems to be a factor also helping markets along. Okay, in terms of commodity markets then, we've got gold prices down 3.4% or $62, back at $1,810 an ounce. Positive equity market sentiment has meant that gold has lost some of its safe haven status. On the other hand, oil prices are up 3.3% at $88.84 a barrel, and we've got copper prices up 1.8% today as well. The Aussie dollar's doing better. It's at just above 1.06 against the US dollar. We've got Australian jobs numbers coming out today. That's Thursday Sydney time. What we're looking for there is a 12,000 increase in employment, and maybe unemployment will dip a little bit from 5.1 to 5%. But the risk, if anything, around our forecast is that we will get a weaker gain. Remember, employment actually fell slightly in the July numbers. These are August figures coming out. What we're seeing in our own surveys and unemployment expectations and so on is that households are sensing the labour market is deteriorating. So the risks around our 12,000 forecast are that we get a weaker outcome, we think. Big events to watch in Europe tomorrow. Bank of England, no rate change expected. European Central Bank, also no change expected. And it would be a huge surprise if Trichet, in his second last meeting, were to actually signal a rate rise at the October, his last meeting as ECB president. If anything, we think the European Central Bank will be cutting rates before long. Okay, more on that tomorrow.